Okay, I'll now start with a chapter on standard costing. Chapter 13, 14, and 15 predominantly focuses on something called as techniques of costing. What is techniques of costing is those things which help me in decision making. Initially, we started with the introduction. We went to cost sheet where we learned various categories of cost, which were chapter 2, 3, 4, 5, 6, or 2, 3, 4, 5. Material cost was 2, labor cost was 3, overhead cost was 4 and 5. Then we learned how to account for them, which is on your non-integrated accounts. Then we learned 5 different methods of costing, starting from unit and batch, job costing, joint and byproduct costing, your operating costing, process costing, all that we learnt. Now we are going to go to an area called techniques of costing, which are going to help an organization in decision making. In that, the first part we are going to learn about standard costing. Okay, any idea what do you mean by standard? What does the term standard mean? You could have come across this term at multiple places. In your practical world, you will come across this term called standard. So, what do you mean by standard? Okay, predetermined rate. What else? Set rules. I don't want you to specifically tell in terms of costing. Okay, you till before you even started your CA, you would have come across this term. So, what is the meaning of standard according to you? Sorry, fixed amount. Okay, set rules, predetermined cost. What else do you mean by the term standard? Benchmarking. Okay. Okay, predominantly I've got what I wanted. So broadly whatever you said is the term standard. Standard basically means there is something against which I can compare. So for example, if ICI doesn't tell you that the passing marks in exam is not 40 and they say you write it and we will decide what is the passing marks for every exam, it becomes slightly difficult for you to assess your performance. If they tell the standard is 40 marks and 50 marks, that is the passing marks, I give it to you, you know where to assess your performance against. So standard is basically something like a benchmark against which I can assess my performance. Now, Bharadwaj Institute, when we started this batch, we have already decided by when we want to complete the batch, by how much we want to take every week. Do we want to conduct one class a week, two classes a week? Which subject do we want to conduct? So, all that standard is already fixed by us. We have done some planning. We may not know exactly planning saying that on Monday I'll teach this, on Tuesday I'll do that. That may not be there, but at least some broad plan is there in our place. If this plan was not there, I will not be able to assess how is my performance going against this. So in our planning exercise when we did, we have already planned saying that by September how much we want to complete, by October how much we want to complete, by November how much we want to complete. All that planning is done. There is something which is going in the backdrop which you may not know, but we have done all that planning saying that, and we are assessing whether we are going in line with the plan. Are we extremely away from the plan? If we are away from the plan, we will tell that we want to take some extra classes, so please allow us to take extra classes. See, that is the purpose of doing that plan. The plan is going to tell me if I am going away from the plan, I may want to take some corrective action. Or if we are above the plan, if we are feeling that okay, things are fine, okay, let's give some break in between or conduct some extra exams in between, we'll try to do something. If in case we are above the plan, if our plan was to complete X and we are already at X plus Y, then we may take it little lenient saying that okay, one or two classes gets cancelled or we give a holiday. It doesn't really impact our planning part. But without that plan in place, I cannot randomly keep taking class and suddenly say okay, your exams are in, we are not able to complete the syllabus. That's not going to work. The standard is basically a benchmark which everybody needs and you also need it. I keep telling this to students that please prepare a plan as to how you are going to complete your CA Inter preparation. So by this time, a plan should be in place. We give a weekly plan to you. Assuming I tell that you come to academy, we will take whatever subject we want to take. Some of you are doing only group 1, some of you are doing both the groups. So if people are doing only one group and I say you come to the academy, and when you come to the academy, you come to the academy thinking it is going to be a group 1 class, and suddenly I take a group 2 subject, you will feel that you will have to you have wasted your time. So assuming if I don't give you a plan for a week, how will it be? If we don't give a plan to you saying that next week what we are going to teach, you come to the academy on Monday, I'll teach whatever I want to do, on Tuesday I'll do whatever I want to do, on Wednesday I'll do whatever. Is it okay to you? So why not okay? Why are you asking a plan to us? Why do you need a plan from our side? Then why are you not preparing a plan for yourself? My question is simple, that so I've not fully gone into the subject till now on the standard costing, maybe some general information. Why not a plan for yourself? When you are expecting, see, the issue with the any student or any human is, you want the other person to be perfect. You will say academy is not doing this, academy is not doing this, academy is not doing this, academy is not doing this. We are, I'm just telling what normally people do. People expect that we conduct test, people expect that we evaluate test, people expect that, but when I conduct test, only half of you write. That part is never seen from the student side. So slightly deviating from the topic, but the point is, uh, in short, I want you to prepare a plan for your preparation. That is the short message I want to give. Unless a plan is in place, because when I say, assuming 1 week I don't give you a plan, Saturday or Sunday messages will start flooding to me saying that please give what is the timetable for next week, please give the timetable for the next week. If I randomly say that I will keep class at not 6:30 to 11:30, I'll suddenly send a message at 4 p.m. saying that there's a class at 4:30. You will not agree to that, no? You are not okay with we randomly keeping a class at random time. You want specific timetable from us. You want not only the time, you also want which subject we are going to teach. Without that, you find it difficult to prepare. See, the classes does only one thing. I keep telling this to the student, the classes is just forcing you to sit in the class for 5 hours and prepare. Otherwise you waste that 5 hours, that's all. That is what normally students do, or normally humans do. So in short, like, we give you a plan, please prepare a plan at your end, whatever time you can spend. I don't know what is your schedule, but you should prepare a timetable. Like, you expect us to give a timetable saying that 6:30 to 11:30, I give you a perfect timetable. Where is your timetable from? Whatever time you can prepare, I don't know. Somebody can prepare for 2 hours a day, somebody can prepare for a 3 hours a day. So like, I give you a plan, expectation is you should start preparing a plan of yours from now onwards. If you are not preparing a weekly plan, then there is something to worry about. So maybe few weeks you will not be in a position to prepare on Thursday because you have certain commitments. So what is going to happen. If I tell you give me a plan after 4 months what you're going to prepare, may be difficult for you to give. But a weekly, you can be in a position to prepare a plan saying that okay, Sunday evening I'll sit together and I'll prepare the plan. On Monday I can study for 3 hours after the class or before the class or whatever time is convenient for you, and which subject. It's just not, the plan is just not what you're going to study. If you can decide the subject, then you will be able to assess your performance. At this point of a time, nobody knows whether you're going in the right track or on the wrong track. You are not having, if you prepare a plan 80-90 percentage of the time, for example in our classes we give you a timetable, and you will see a lot of times we change the timetable. Because why we are changing, we know exceptional reasons will be there. We either change the subject, sometimes we cancel the class also, sometimes we keep a test, we try to manage it. In your case, maybe, in my case, in academy's case, if I am not there, somebody else is there, so the plan goes through that way. But in your case, maybe if you are not available, you will not study, but at least it will give you a guilt feeling. That is what I want students to have. The guilt feeling should come every week in case you are not doing your preparation. At some stage, you will start at least following 80% of your timetable, or a 90% or 100% of your timetable. If you have a timetable, at least you will do preparation. Else you are not going to prepare. Let me make it very clear. People say we want test. Test is because if I keep a test, at least you will do some preparation. Why I give homework? Because at least you will do some work and come back. Otherwise you are not. If I remove homework, if I remove test, technically you are not going to do anything. You will feel that last 3 months is there for preparation. No, last 3 months are not there for Preparation is a continuous effort. It is just not for last 3 months. So to cut it short, please prepare a timetable. That is the only message I want to give, because standard costing or standard is a benchmark to assess your performance. If you don't have a benchmark to assess your performance, you will find it difficult in many times. For example, you book a train. The train does not say at what time it will depart. It says we will message you 5 minutes before when the train is going to start. You will not be okay with it. You will have to stay in station only then. Otherwise, if it's going to say 5 minutes before I'm going to start my journey, stay in station, that's all. Because you cannot suddenly, from my home I cannot go to the station 5 minutes and I take the train. It's not possible. So everywhere you need a benchmark, you need certain plan. That is what standard costing does. Every organization prepares a plan. Every organization prepares a plan. There is a budget which is going to be prepared, which is chapter 15. I'll discuss budget in chapter 15. But basically a budget is a benchmark or against which I want to assess my performance. Every company prepares projected financial statements. What is projected financial statement? Like you have your past financial statement, you will have to give future financial statement. You go to a bank and ask for a loan. When you ask for a loan, bank will say, give me your projected financial statement. I want to check whether you have the ability to repay the loan or not. For the ability to repay the loan, they need projected financial statement. You are not taking a loan, but still you want to prepare a projected financial statement. Why a projected financial statement is, it will help me in assessing whether every month I am going in line with my expectation or I am going away from my expectation. Just because I prepared a projected financial statement does not mean my performance is going to be in line. Many a times the projected financial statement itself will change. Example, COVID came in. When COVID came in, before COVID, companies would have a plan saying that I'll grow at the rate of 20%, 25%. Moment COVID came in, many companies would have altered their plans, because those are certain events which are difficult to forecast. So when you prepare your plan and suddenly in between something happens, for example, you feel sick, something which you cannot predict, and that has happened, obviously your plan has to undergo a change. That time you cannot say that I want to go as per exactly the plan, but plan only tells you that when you want to make correction. If plan is not there, for example, our October month did not go as per plan, we could not complete things. What we are going to do is, in the month of November, we are going to have some extra classes. If October did not go as per plan, that is what I will be forced to do. In October month you did not complete your, or week 1 you could not follow your plan, week 2 try to overachieve it. So something has to happen, but a plan is mandatory. So every organization at the beginning of the month or at the beginning of the year, most of the times in the month of Feb or March, they will have a projected performance or projected financial statement. Not only for 1 year, you may even do it for 2 years, 3 years. This projected performance or a budget, we normally call it as a budget. At your home, your parents would be doing a budget for the month. They know what needs to be spent. For example, you were to join Bharadwaj Institute, you would have intimated this to them. They would have asked how much is going to be the fees. They would have done the planning for the 2 months before, 3 months before, 4 months before. It's not possible that every month suddenly take out a fees of 40,000 and pay it, because in their budget that has to fit in. For some people it may fit in, for some people it may not fit in. So they will do some backward calculation saying that okay, I'll be needing this in this month. Let me do the planning for that. Because of that planning, what could have happened is, you were to go on a trip, you may cancel that saying that okay, let me cancel the trip because I need to pay for the classes. So you will have to do your planning. That plan tells you what correction needs to happen. If you don't have a plan, you will randomly keep spending money, suddenly you have to take classes, it's not possible. So every person, sometime or the other, you would have also done a plan at some stage or the other. A classic example, if you have to go on a trip, you will do all possible planning for that, so that you are able to cover all places, you are able to cover within the cost, within the time, whatever is your decision. You have certain constraints at your place. Your constraint is you want to cover only 2 days, Your constraint is maybe you want to spend only 10,000. Your constraint, whatever constraints are there, within that constraint you will prepare your plan. Plan is kind of mandatory, otherwise it is very very difficult for an organization to move ahead. So every organization will prepare a standard. What we are going to do in standard costing is, there is going to be a standard cost, there is going to be an actual cost every month, every week, every day, every quarter, whatever periodicity I decide, I will assess my actual performance as compared to the planned performance. There will be deviation. It could be a favorable deviation, it could be an adverse deviation. Favorable, adverse, both you need to analyze. Favorable does not mean good. An example, I have used bad quality of raw material. I've used bad quality of raw material. Moment you do that, your raw material cost will be lower than what you planned. Raw material cost is going to be lower than what you planned. That is called a favorable variance. Why favorable? Because you spent less than what you wanted. But who will see this, the other aspect which is there, which is you have used a bad quality of raw material. Immediate impact may not be there, but bad quality of raw material will impact you after 2 or 3 months, because customer will not buy now. Customers will feel that he is giving me an inferior product. So be it favorable deviation. For example, I can complete your syllabus faster by that will be a favorable deviation. How did I complete syllabus faster? I skipped some of the portion. So that is a favorable variance for us. That will become a favorable variance for us, but that's not a good favorable variance. So just because we got a favorable variance or an adverse variance, it does not mean it is a good or a bad, unless you analyze the reason. When you analyze the reason, if the reason is because of efficiency or inefficiency, for example, we have a favorable variance because of the efficiency of the teacher, then that is good to have. Or adverse variance because of the inefficiency of the teacher, then that is a bad reason. Otherwise, some exception, for example, I have an adverse variance because in this batch I feel I need to spend little bit more time than the earlier batches, because the students are finding little difficult to pick it up, because different batch of students will have different expectation or different kind of learning atmosphere. So in this batch maybe the students are slow learner, because of which I'm spending more time. Academy cannot start penalizing me saying that we are spending more time than what is needed, because I'm giving a justifiable reason. So every time I will prepare a standard or a budget, I will get to know what is the actual performance and find out what is the deviation in performance. So practically this is what will happen. Variation in profit will be there. This variation can happen because of cost, can happen because of sales. In cost, it can be because of material cost, it can be because of labor cost, it can be because of variable overhead, fixed overhead. Basically, we classify cost into all this. So, material cost, I will try to find the reason. After finding a reason, material cost variance has happened. It could be because of price at which you bought the raw material, or it could be because of the quantity which you used. You will understand all this later. Price is the responsibility of the purchase manager. So if you have paid more price than what is planned for, I will question the purchase manager. Now there can be a justifiable reason again. What happened is, when I did my planning, I said sugar is a raw material, we'll buy at 50 rupees per kg. That was the plan. Suddenly some floods have happened. Because of the flood, what has happened is the crop is very bad. There's a shortage of sugar in the market and prices have shot up to 80, 90, and still this person bought it at 75, let's assume. Now you cannot penalize him saying that you told 50 rupees and you bought it at 75. That is why we try to find reason as to why a variation is happening. A favorable variance may indicate a problem. An adverse variance may also indicate that something good has happened. It is possible unless you understand the reason. There's an adverse variance because I spent more time, because this batch needed more time. Now academy cannot penalize me just because I've spent more time, or I spent lesser time and completed the batch, but students are unhappy and they cannot tell me that you have done an excellent job, you have completed earlier than what is needed. So there can be favorable variance, there can be adverse variance. Now write standard cost, standard costing. introduction, standard standard refers to the standard refers to the planned performance planned performance whereas actual refers to the actual performance refers to the actual performance. Standard costing standard costing analyzes analyzes the variation in analyzes the variation actual performance in actual performance as compared to as compared to budgeted performance and fix responsibility slash take corrective action and fix responsibility fixes you may put and fixes responsibility slashes takes corrective action. Now again I keep talking about this, but this is something I keep telling students. Plan, please prepare a weekly plan now onwards. The weekly plan will fix something called as, it will help you to take corrective action. Unfortunately, you don't do this planning at the last stage. In the last month you decide whether you want to write one group or two group. All that strategy will not work. Many students keep doing this in the normal scenario. They come back to me in the month of March or April and then say, should I do one group or two group? That's not the right way of. I'm happy with if you decide only one group. I'm happy if you decide two group, whatever you decide, but that decision can't be taken in the month of April when you are writing your exams in the month of May. Why are you wasting your time by doing two groups? So, in short, I'm not telling you need to do one group, but I'm just telling you, please start doing your proper planning, because corrective action can't be. What is corrective action is, when you do your planning, you may decide that okay, 2 hours a day will not work for me. I may have to do 5 hours a day. I may have to do 6 hours a day. That is what the corrective action is all about. I told weekly plan, but beyond weekly plan, you should have a plan till the month of May. How are you going to complete your 6 subjects with 2-3 revisions? So how is that possible is something you will have to take a call. I cannot take a call on behalf of you. You need to take a call as to how are you going to complete syllabus with 2-3 revision. That planning, if you have, you will be in a position to. That planning may tell today, saying that okay, two groups are not possible for us, our plan is saying this, then you take a corrective action today. Taking a corrective action today is okay, but taking, you are trying to do preparation for both the groups and in the end you decide, that's not acceptable. Your corrective action could be that okay, I spend 1 hour on some sport. Let's assume you are playing some sport for 1 hour a day. You ultimately decide, no, that 1 hour I cannot afford at this point of time, let me take a break from that and spend that on studies. Or XYZ thing, you were doing something else, you are cutting that down and moving to this. That's all your wish, but I just want to simply say, have a plan in place. Now, uh, in the context of in the context of a company in the context of a company, standard costing analyzes the difference in analyzes the difference in budgeted profit and actual profit. Budgeted profit and actual profit. Now write variation in profit in the center, variation in profit, cost side, sales side. Variation in profit, it could be because of cost, it could be because of sales. Variation in profit can be because of cost, can be because of sales. In cost, write material, labor, overheads. Cost can be because of material, labor and overheads. Overheads split into two. Variable overhead, fixed overhead. This is what standard costing is all about. In your syllabus, sales variances are not there. So you are going to learn how to calculate cost variance, which is material cost variance, labor cost variance, overhead cost variance. In that you have a variable overhead cost variance and a fixed overhead cost variance. Ideally they should have also added the sales variances. I don't know why they have not added, but sales variances is not part of the syllabus. You will learn about that in final level. Any doubts on this? Next, give the heading. Budgeted cost, actual cost, so budgeted cost, standard cost and actual cost. Budgeted, standard and actual. Budgeted cost, standard cost and actual cost. Okay, now let's take an example. I told my production manager that you produce 10,000 units and incur a cost of 40 lakh. This was the plan which was given to him. Produce 10,000 units, plan or budget, whatever name you want to use. The term budget, plan, standard will keep interchangeably used. There is some difference in these words, but most of the times in the practical world you will interchangeably. What is the plan? Or you'll ask what is the budget? What is the standard? So all these are almost similar. This is the budget. Actual produced 8,000 units and spent nothing for you to write. Listen, there's nothing to write. I'll give you some notes which is needed. Spent 34 lakhs. Okay, your plan was to produce 10,000 units and spend 40 lakh. You have produced 8,000 units and spent 34 lakh. The production manager came and told the MD saying that I've saved 6 lakh rupees for the company. I've saved 6 lakh rupees for the company. You told me to spend 40 lakh rupees. I have spent only 34 lakh rupees. I am eligible for a bonus. I am eligible for a bonus or a reward. You told me to spend 40 lakh. I have spent only 34 lakh. Why don't you give me a reward? MD somewhere felt that reward is not applicable here. MD is feeling that reward should not be paid. It's not that he doesn't want to pay, but he feels that there is no saving in cost. The production manager is very clear. 40 lakh you told me to spend. I have spent only 34 lakh. So give me a reward. What is the issue here? Sorry. Okay, so what happened? You told me to incur 40. So I'm the production manager. I'm just putting an argument. You told me to spend 40 lakh. I've spent only 34 lakh. So you give me a bonus. Okay, for 8,000 units, we should spend only 32 lakhs. That 32 lakh is called standard cost. The 32 lakh is called standard cost, 40 lakh is called budgeted cost. 40 lakh is called budgeted cost and 34 lakh is called actual cost. Standard cost is the variation between standard variance is the difference between standard cost and actual cost. Only one exception is there. Assuming you give this 32 lakh, but I say this entire cost is a fixed cost. This entire cost is a fixed cost. If it's a fixed cost, 10,000 also 40 lakh, 8,000 also 40 lakh, 6,000 also 40 lakh. If this was a fixed cost fully, obviously you will have to give him a incentive. So only for fixed overhead, variance is the difference between budgeted cost and actual cost. But for everything else, variable overhead, direct material, direct labor, it is the variation between standard cost and actual. Or in short, it is standard and actual only. But for fixed overheads, budgeted cost and standard cost is same. Budgeted cost and standard cost is same. That is only for fixed overheads. So when I go to fixed overheads, I'll be talking about this. But the important part you will have to be very clear is somebody says this, you cannot say the production manager has done a bad job. You now need to analyze in this 40 lakh, there will be a fixed component, there will be a variable component. Variable component proportionately has to go down for 8,000 units. Fixed component will not go down. If you just give me this information, I'll assume everything to be variable. I'll assume everything to be variable, and as you said, that is what I will also say. 8,000 units, 32 lakh rupees is what you need to spend. You have spent 34 lakh rupees. There is a penalty only I can charge, no concept of a reward here. Clear? Any doubts on this? Now, right? Budgeted cost, budgeted cost refers to the cost to be incurred, cost to be incurred for budgeted output, cost to be incurred for budgeted output. To be incurred, you will have to be very clear on that word. To be incurred means this is the plan, this is the plan. Standard cost refers to the cost to be incurred, cost to be incurred for actual output. If you remember, in labor chapter we used to calculate standard time. The equation used to be standard time is equal to actual output. So standard cost, standard profit, standard time, everything is calculated with the help of actual output. Actual cost refers to the cost incurred for actual output. This is for actual output. This is also for actual output. So you can compare. One is to be incurred, another one is incurred. Cost to be incurred and another one is cost incurred. You can compare them. These two can be compared. Clear? Example. Budgeted output 40,000 units. Budgeted cost 20 per unit. Budgeted output 40,000 units. Budgeted cost 20 per unit. Actual output 50,000 units. Actual cost 21 per unit. Now listen, the term budgeted cost per unit or standard cost per unit is same. When you do, for example, when I gave you this, you said 10,040 lakh, 8,032 lakh. If you do per unit calculation, both will be same. At a per unit, the cost to be incurred for budgeted output or standard output or standard cost or budgeted cost, both are same at a per unit. At a per unit, both are technically same. So now write budgeted cost equal to 40,000 into 20. 40,000 into 20, 80 lakh. Standard cost 50,000 into 20, 50,000 into 20. Actual cost budgeted 80 lakhs, standard 1 crore, actual 1 crore 5 lakhs. Okay, I'm not sure where you will write it. I should have written one more line here. If you don't have space, write it after the example. Cost variance. Cost variance is the difference between standard cost and actual cost. Difference between standard cost and actual cost. Don't find the difference between budgeted cost and actual cost and say whether there is a penalty or a reward. It is standard cost and actual cost. In this example, cost variance, standard cost minus actual cost, 1 crore, 1 crore 5 lakhs, 5 lakh. A means adverse, 5 lakh A, no sign, no plus minus sign and all, 5 lakh adverse. If you get a negative answer, write 5 lakh A. If you get a positive answer, write 5 lakh F. F means favorable, A means adverse. No plus minus sign. The cost variance is 5 lakh adverse. Clear? Any doubts on this? Okay, I am taking an early break now because I'll need around 2 hours of discussion for the next concept when I do one problem on material costing, the initial intro. So let's take a break and then resume after 10 minutes. Okay, now I'll move to the variances part, in which we learnt that the variances can be because of cost or sales. In cost, we learnt material, labor, overhead. I'm going to start with material variances. Be in listen mode. Once you understand material variances properly, every other variance is going to be very simple. So, whenever I say I want you to write something, write it. Otherwise, be in listen mode only. Don't write. Now, write situation 1. Or first give material variances, right? Material variances in the theory note itself. Material variances. Situation 1. Situation 1. Single material. Now, a company in a practical world may be using a single raw material to produce a product, or multiple raw materials can be combined together to produce a product. First, I'll explain a situation where we are using a single raw material to produce a product. That is, you don't need any other material. With one raw material, you'll be able to produce cost. Now be in lesson mode only. I don't want you to write anything. Material cost, you can note down this later. There are two components of material cost. If somebody says material cost is 100 rupees per unit, the two components is how much raw material are we going to use and at what price are we going to buy the raw material. So the two components is price multiplied with quantity. Price multiplied with quantity. So whenever you calculate a material cost variance, you'll have to bifurcate that into price variance and quantity variance. How much is because of the price, how much is because of the quantity, whatever variance happened. Price is the responsibility of purchase manager because he buys the product from external world, so he is responsible for the price. Quantity is the responsibility of the production manager because production manager has to properly use the quantity. So the two components is price and quantity. Now for any variance, we prepare something called as a computation table and then write formulae. For this formula, in material variances we have a single material situation where we have three formulae, then multiple material situation where we have some 5 formulae. Like that you keep adding on, this chapter will have 30 to 40 different formulae which will be there. Now I don't want you to by heart any of the formulae, so there is some method in which we go through the formula. Now listen, this side I'm writing price, this side I'm writing quantity. Just give me a minute. Price, this chart is just to remember the formula, nothing that in the practical world it will happen this way. In y-axis I'm writing in x-axis I'm writing quantity, in y-axis I'm writing price. There are two types of prices, one is called SP, another one is called AP. What is SP? Standard price. AP is actual price. Like that we have SQ, AQ. What is SQ? Standard quantity. AQ is actual quantity. Just to give a reference, we learnt standard time and actual time in labor variances. Now, the SQ can be more than AQ, SQ can be less than AQ, SP can be more than AP, SP can be less than AP. In the chart, we have done it this way just to understand the formula and remember the formula. There's nothing like that SP will be lower or SP will be higher. It can be either ways. Now, in order to do the question, I'll have to prepare a computation table where I start from here. I start from SP. Just give me a minute. So I start from SP. You will start from SP and keep moving like this and touch SQ. Start from SP, keep moving down and touch standard quantity. Then start from SP, keep moving forward and touch AQ. Touch AQ. Start from standard price, move till standard quantity. Start from standard price, move till actual quantity. Start from actual price and move only till actual quantity. Directly till actual. This is just to remember the table. Just to remember the table. I'll explain logic and all in some time. So what we will do is start from SP, connect with the first item SQ, start from SP, connect with the second item which is AQ, start from AP, connect with the last item which is AQ. So the computation table will have SP into SQ, SP into AQ, AP into AQ. Standard price into standard quantity is called standard material cost. Two standards, when you multiply, you will get the standard cost. AP into AQ is called actual material cost. We have something called as material cost variance. The formula for material cost variance is the difference between standard material cost and actual material cost. Material price variance, difference between standard material price and actual material price. There are some changes which will be there, but broadly, if somebody asks what is the formula for variable overhead efficiency variance, you will learn about this later. Difference between standard efficiency and actual efficiency. Sales price variance, difference between standard price and actual price. Material usage variance, difference between standard usage and actual usage. Material mix variance, difference between standard mix and actual mix. Material yield variance, difference between standard yield and actual yield. Labor efficiency, difference between standard efficiency and actual efficiency. It can go on like this, there's no end to this. In simple words, the formula is always standard minus actual. So here I have standard price, standard quantity, actual price, actual quantity. The gap between these two is called as the material cost variance. Now there are two parts here. There is this part, there is this green shaded one is there, there is this segment, and there is this segment. You see two segments being there. Each of these are variances. Each of these are variances. There is a segment which is shaded in blue, there's a segment which is shaded in green. These are variances. Now what are these variances? You see the blue shaded one. The blue shaded one is comparing AP and SP. The blue shaded one is comparing AP and SP. So this is called price variance, comparing AP and SP. The green shaded one is comparing SQ and AQ. It's comparing the SQ and AQ. This is called quantity, but the term is not quantity. The term is called usage. Material usage variance, material price variance. We don't use the word material quantity variance. We use the term material usage variance. Usage means how much raw material has been used. So the top part is called price variance. It may not be visible to you properly. This is the price variance, and this part is the usage variance. There is a price variance and there is a usage variance. Now I will have to get the formula for usage variance. How do I get the formula for usage variances? Looking at the chart. Looking at the chart. Now what is usage variances? Let's assume you start from SP, okay, and go on till the end. Go on till the end. That is a bigger rectangle. That is a bigger rectangle. From that bigger rectangle, if you remove the smaller rectangle, this portion, if you remove this portion that is from the bigger rectangle, if you remove that smaller portion, you will be left with usage variance. You will be left with usage variance. Similarly, for price variance, if you start from the bigger rectangle from the top and remove the bottom rectangle, you will be left with price variance. You will be left with price variance. From a bigger rectangle, if you remove a smaller rectangle, or from a smaller rectangle you remove a bigger rectangle, you will be left with that portion. You will be left with that portion. Now what we do for formulas, we subtract smaller minus the bigger. We subtract smaller rectangle minus the bigger. Why I do smaller minus bigger is formula is standard minus actual. The bigger rectangle is actual, the smaller rectangle is standard. For example, SP into SQ is the smallest rectangle. AP into AQ is the biggest rectangle, starting from AP till AQ. All these are different rectangles. So you have three rectangles. SP into SQ is one rectangle. SP into AQ is another rectangle. AP into AQ is another rectangle. I could have prepared a fourth rectangle which is AP into SQ, but I don't need it. I don't need it. There is a rectangle 1 which is SP into SQ. There is a rectangle 2 which is SP into AQ. There is a rectangle 3 which is AP into AQ. I don't need this rectangle of AP into SQ. I don't need it, so I am not getting into that. That doesn't serve any purpose in variance computation. So we have three rectangle. This is rectangle 1 R1, this is rectangle 2 R2, this is rectangle 3 R3. Now, price variance is the difference between two rectangles. Usage variance is the difference between two rectangle, and cost variance is the difference between two rectangle. Which rectangle alone you will have to check. Which rectangle you will have to check. You will have to decide the rectangle in such a manner that from a bigger rectangle you subtract a smaller, from a smaller you subtract a bigger. You should be left with the green shaded one and the blue shaded one. You should be left with the green shaded one and the blue shaded one. Clear? Any doubts till this? I need to select the rectangle in such a manner that I am left with the green shaded one and the blue shaded one. The green shaded one will be left if you start with R1 and subtract R2. R1 minus R2. What is R1 is SP into SQ. What is R2 is SP into AQ. The leftover portion is the green shaded one. The leftover portion is the green shaded one. I'll repeat again. I want to fix the formula in such a manner. Once you are clear on this, everything else is self-explanatory. Formula is where people find it difficult. Problem solving will have its own challenges at times, but formula is where people find it little difficult. They ignore this chapter because they have to remember the formula. I don't want you to remember any formula. So price variance is the difference between R1 rectangle and R2 rectangle. Somebody says, no, I want to do R2 minus R1, do it. I don't have a problem. That will become actual minus standard. I want the formula to be standard minus actual. Also, it is possible that AQ comes before SQ. In a problem, AQ can be lower than SQ. SQ can be lower than AQ. I don't want to change formula or rectangle different ways. So we have a common rectangle we are going to use. When you solve a problem, SQ can be more, SQ can be less. You are thinking SP into SQ, smaller rectangle will be lesser than SP into AQ, which is a bigger rectangle. But when I do a problem, SP into AQ can be more than SP into SQ, can be less than SP into SQ. All that can happen. Let's not worry about all that. What I want is very clear. Which rectangle minus which rectangle is that yellow shaded one? Sorry, the green shaded one and the blue shaded one. The blue shaded one should be which minus which? If you have understood the rectangles, you should be in a position to tell. SP into AQ minus AP into AQ. The green plus the blue put together is the cost variance. The green and the blue put together is the cost variance, which is the smallest rectangle, SP into SQ, minus the biggest rectangle, which is AP into AQ. You see three rectangle. We will reach a stage where there will be a problem where there will be five rectangles. That is, different variances are there. You will reach a stage called material variances. Two material variances. You will see something called as labor variances with idle time, without time. So there can be five rectangle, there can be even six rectangle. Doesn't really matter. Logic should be very clear. Logic is, I need to link two rectangle which are related to each other. Usage is linked by R1 compared with R2. R1 compared with R2, and price is linking R1 compared with R3. I don't want you to draw the chart for the time being. Just write this first. Material cost is split in price and quantity. Material cost split into two. Price, quantity. Price and quantity. Clear? Now write along with me because the chart may not be very clear at this time. SP, right? SP, AP, SQ, AQ. SP, AP, SQ, AQ. Connect SP with SQ and write below computation table. SP with SQ. SP with SQ. I've connected standard price with standard quantity and wrote as the first item. Start from SP, connect with AQ, write that as the second item. SP into AQ. That's the second item. Connect AP with AQ. That's the third item. Standard price into standard quantity, standard price into actual price into actual quantity. SP into SQ in bracket, standard material cost, standard material cost, this in bracket, actual material cost, standard material cost and actual material cost. Standard material cost, actual material cost. Clear? Now this part in between, right? Price, maybe some other way, and write usage, price and usage. Or don't put any lines also, just write price and usage. I think that is better. Just write price and usage. If I put the lines, it's okay. Otherwise, just write price and this is usage. Okay. Now you will have to arrive at a formula in such a manner that that rectangle becomes a balancing figure. That rectangle becomes a balancing figure. Look at the chart and tell me what is the formula for price variance. SP into AQ. I want everyone to participate because the first chart totally I'm going to do maybe from 10 charts. This alone only I'll be explaining. Beyond that, I'm not going to explain anything in detail. So unless you have a doubt on how to look at the chart and how to arrive at a formula, it will be very difficult later on. So tell me what is the price variance formula? SP into AQ minus AP into AQ. That is what we are doing is I'm starting from here. SP into AQ is the green rectangle. From there, you are subtracting AP into AQ, which is a blue rectangle. Leftover is the price. The leftover is the price. In between, what is leftover is the price. Tell me what is the formula for usage variance. SP into SQ minus SP into AQ. Formula is always we are going to do smaller minus the bigger, because the smaller will have the standard, the bigger will have the actual. This is just to remember the formula. There's nothing that you will have to draw a chart and all. When we do problem, few students draw a chart and do it, few students remember the logic and do it. Whatever way you do, that's fine. So usage variance part, put uh, so SP into SQ, this is the smaller one, and from there you subtract the bigger one, which is SP into AQ. Now write formulae. Formulae. Center of the page, material cost variance. Material cost variance is equal to difference between standard material cost and actual material cost. Standard material cost and actual material cost. SP into SQ minus AP into AQ. SP into SQ minus AP into AQ. Standard material cost and actual material cost. split into material price variance, material usage variance, price and usage, difference between standard price and actual price, standard price and actual price, difference between standard quantity and actual quantity, standard price and actual price, standard quantity and actual quantity. Look at the chart and tell me the formula for material price variance. SP into AQ minus AP into AQ. Usage variance SP into SQ. Clear? Okay. This takes care of the formula. Just to simplify this formula, or you need not write this. I can write this as SP minus AP into AQ. AQ is common in both the places. So when you do price variance, you multiply with the same quantity because you are looking at what is the reason because of price, which is difference between SP and AP. I told difference between SP and AP. This side if you see SQ minus AQ into SP. The formula is difference between standard quantity and actual quantity. Multiplier is SP. Multiplier remains same. That is what the formula is going to do. Clear? Any doubts on this? Any doubts on this part? Next, right? Standard price. Done with the done till this. Any doubts? All right. Standard notes. Notes below this. Standard price refers to the price to be paid, price to be paid for every unit of raw material, price to be paid for every unit of raw material. It can be every kg, it can be every liter, whatever it is. What is the price you want to pay for 1 unit of raw material? Actual price refers to the price actually paid for every unit of raw material. Price actually paid for every unit of raw material. To be paid and actually paid. Standard quantity refers to the quantity to be consumed, quantity to be consumed for producing actual output, for producing actual output, quantity to be consumed for producing actual output. Standard quantity is equal to actual output into input by output. You would have learned this formula in EOQ. From production, how much raw material I need to consume, I calculate this way. Actual production into input by output is what you would have learned there. Output is production. Actual output into input by output, that is a standard quantity. Actual quantity refers to the quantity actually consumed. Quantity actually consumed for producing actual output. Now there is a difference between AQ and AO. AQ means raw material. AO means finished product. AO is the finished product. AQ is the raw material. Actual quantity equal to opening stock plus purchases minus closing stock. In case they have given, it is quantity consumed. Some question will give you quantity purchased. If problem is silent, purchase is equal to consumption. But sometimes they can give you this data where you can calculate consumption. SP refers to the price to be paid. AP refers to the price actually paid. SQ refers to the quantity to be consumed. AQ refers to the quantity actually consumed. Clear? Any doubts on this? Done? Can you proceed? Situation 2. Multiple raw material. Now you'll write along with me. Situation 2. Multiple raw material. Multiple raw material. Put a chart. SP, AP, SQ, have some space in between, something will come. AQ, this is the chart you learned. In between an item will come called as RSQ, revised standard quantity. We also use the term RAQ, revised standard quantity or revised actual quantity. When you have two material, when you have two raw material, you will have to bring in this term called as RSQ, revised standard quantity. Below this computation table, start with SP, connect with the first item. SP into SQ. Below this computation table, connect with the first item, SP into SQ. Connect with the second item, SP into RSQ. Third item, SP into AQ. AP only with AQ. So here we have four rectangles, R1 which is SP into SQ, R2 which is SP into RSQ, R3 which is SP into AQ, R4 which is AP into AQ. I'll explain what is RSQ in some time. Any doubts on the four rectangle? Top part is called price. Top part is called price. Bottom you have two parts. Both put together is called usage. Both put together. This is put together, okay? Put together is usage. There is a small, there are two parts which you see below. Both put together is called usage, and this is called yield, and this is called mix. What is mix, what is yield and all we'll touch upon later. The first part is called yield, the second part is called mix. The two subparts put together is usage. The two subparts put together is usage. Now if you have understood what I explained in part 1, you should be in a position to tell me the formula now. What should be the formula for mix variance? Which rectangle minus which rectangle? SP into RSQ minus SP into AQ, SP into RSQ minus SP into AQ. What should be the formula for yield variance? SP into SQ minus SP into RSQ. I want everyone to participate. There are four rectangles. SP into SQ is the rectangle 1, SP into RSQ is the rectangle 2, SP into AQ is the rectangle 3, AP into AQ is rectangle 4. A smaller rectangle minus the bigger rectangle. All these put together is the cost variance. All these put together is the cost variance. What is the formula for cost variance? Or smallest rectangle SP into SQ minus the biggest rectangle AP into AQ. What is the formula for usage variance? SP into SQ minus SP into AQ, SP into AQ. So basically I have this portion which is price, the green one. I have the yellow one which is yield. I have this as mix. The pink one and the yellow one put together is the usage variance. The green one is the price variance. Green, yellow and pink all put together is the cost variance. All put together is the cost variance. So if you want the pink to be the balancing figure, start with SP, connect with RSQ, start again from SP, connect with AQ. The balancing figure is the pink portion. If you want the yellow one to be the balancing figure, start with SP, connect with SQ. Start again with SP, connect with RSQ. Connect with RSQ. The missing part is the yellow one. Both put together, if you want the missing one, which is SP into SQ minus SP into AQ. Clear? Any doubts on this? Any doubts on this? What I've tried explaining? Have you written this in bracket price usage? This is done. Now write the formula below this. Center of the page, material cost variance, SP into SQ, AP into AQ. If somebody asks what is the material cost variance formula, simple formula is standard material cost minus actual material cost. Split into two. Material price variance, material usage variance. Price and usage. Look at the chart and tell me the price variance formula. SP into AQ. Whenever any subvariance we do, only one of them will change. Price is changing, quantity is remaining same. Price is changing, but quantity is remaining same. Material usage variance, what is the formula? SP into SQ. Same formula which you had earlier also. In a single material you had this formula only, multiple material also same formula only. SP into SQ minus SP into AQ, split into two. Yield variance, material yield variance, or other name for this is material sub usage variance. That is a part of the usage variance. Sub usage, yield variance or sub usage variance. I'll explain the calculation of this when I do a problem only. Yield or sub usage, material mix variance, mix variance. This side, right? Difference between standard yield and actual yield. Difference between standard yield and actual yield. Difference between standard mix and actual mix. Standard mix and actual mix. Look at the chart and tell me the formula for yield variance. Write the formula. SP into SQ minus SP into RSQ. SP into RSQ. The logic of yield and mix I'll explain in some time. Clear? Any doubts till this? Only thing I meant to explain what is this yield and what is this mix part. That logic I meant to discuss. Any doubts till this? Now write note. RSQ RSQ is the total of RSQ is the total of actual quantity in standard mix. RSQ is the total of actual quantity in standard mix. Now this mix variance will come into picture only when you have two material or more. Whenever you have two material or more, you have to mix two material together to find out your finished product. Now what can happen is, let's understand this. You can write this in a minute. Example, SQ, RSQ, AQ. You did your standard quantity calculation, which is actual output into input by output. You got this as 700, 300, which basically mean the mix is 70-30. The ratio is 70-30. You should mix two raw material together in the ratio of 70-30. Mix variance will occur if you mix it in the ratio of 72-28, 75-25, 65-35, 60-40. When you deviate from the 70-30, mix variance will occur. Now when you deviate, what can happen is, you may use more of the expensive mix or a cheaper mix. Anything can happen. For example, A is a costlier material, B is a cheaper material. So what you did is, instead of using 70-30, you thought, let me alter the mix slightly and use 65-35. When you do that, you are using less of the costlier material and more of the cheaper material. That can lead to favorable mix variance. Otherwise, it can lead to adverse. Be it favorable mix variance or adverse mix variance, both are problem. Both are problem, because my plan was to mix it in the ratio of 70-30. If you mix in any other proportion, you have impact on the final product. The mix should be 70-30. What you did is, you have used 800, 400. 800 and 400 is what you have actually used. So basically, I wanted a 70-30 mix. We have in reality used 2:1 mix. 2:1 mix, which is indirectly 66.67 is to 33.33. That is the mix we have used. This mix will lead to mix variance, this different mix. In case I had used more raw material, but the mix is maintained at 70-30. If you maintain your mix at 70-30, mix variance will not happen. If you maintain the mix at 70-30, for example, you used, let's assume, 910, 390. If this is what you have used, then mix variance will not happen. 910 is to 390 is 70/30. 910 is to 390 is 70/30. If you have followed 70/30 mix variance will not happen. Now what is RSQ is, put a total of this. Total is 1200. Here the total is 1000. This total split in this ratio. This total RSQ is the total of actual quantity in standard mix. Split 1200 in the ratio of 70/30. 1200 in the ratio of 70/30 will be 840, 360. Total is 1200. Mix variance is the difference between this mix, but the overall quantity is same. Whenever you do any subvariance, only one thing should change. Two things cannot change. When you do price variance, price changes, quantity remains same. When you do usage variance, quantity changes, price remain same. When you do mix variance, the quantity should remain same, only the mix should change. When you do yield variance, the mix should remain same, only the quantity should change. So what is mix variance? Mix variance is the difference between 70/30 mix and 66.67 and 33.33 mix with overall quantity remaining 1200. Overall quantity remaining 1200. So mix variance is the difference between RSQ and AQ. RSQ has standard mix. AQ has actual mix. So mix variance is the difference between standard mix and actual mix. Standard mix is there in RSQ, actual mix is there in AQ. Clear? Any doubts on this? Yield variance. What is yield variances? You wanted to use 1000 kg of raw material and produce 800 kg output. 800 kg output. That is called standard yield. That is called standard yield. But you have used 1200 and got same 800 because your actual quantity will give you the actual output. The relationship between AQ and AO is called actual yield. AQ and AO is called actual yield. And SQ and AO, because standard quantity is calculated with the help of actual output, that is called standard yield. For example, I wanted to use 1000 kg of raw material and produce 800 units. I've used 1200 kg and produced 800. Both is 800 only. Both are 800. Standard quantity refers to the quantity to be used. AQ refers to the quantity actually used. So you have used 1000 kg. Sorry, you have used 1200 kg and got 800 units, which is the actual yield. You should have used 1000 kg and got 800 units, which is the standard yield. The difference between them is the yield variance. So when you do yield variance, your mix is remaining same, 70/30, 70/30. When you are doing your yield variance, the mix, SQ mix and RSQ mix is same. When you are doing your mix variance, the quantity 1200 and 1200 is same, but only the mix is changing. Only the mix is changing. Yield variance is the difference between standard yield and actual yield. Standard yield will come from SQ, actual yield will come from RSQ. In fact, actual yield comes from AQ. But then if you do SQ and AQ, the mix also changes, yield also changes. You cannot have two changes, you can have only one change. So that is why you look at that material variance, no? That main material variance is comparing SQ with AQ, where the yield also changes and the mix also changes. Both changes are given effect there. 700 is to 300, 1000 is the quantity. 800 is to 400, 1200 is the quantity. Quantity is changing. Mix is also changing, 70/30 and 66/33. So when you are doing yield variance, I don't want the mix to change. When I'm doing the mix variance, I don't want the quantity to change. So yield variance is the difference between 70/30 mix, 70/30 mix. No change there. Only the quantity changes, 1000 and 1200. When you do your mix variance, 1200 and 1200 remain same, but the mix alone undergoes a change. Clear? Any doubts on this? First write this example. SQ 700, 300, 1000. RSQ, don't write anything. AQ 800, 400. Don't write anything on RSQ. 800, 400. 700, 300, 800, 400. Put a total 1000, 1200. Don't write anything for RSQ below the table. RSQ of A is equal to 1200 into 70%. RSQ of B is equal to 1200 into 30%. 840 and 360. 70% and 30%. Write that in the top table now. 840, 360, 1200. If you have understood till this chapter is over. So I'll keep giving you different charts. I'll keep giving you different problems for solving. But once you are clear on this segment till this, the problem is over. Single material I've explained, multiple material I'll explain. Then I'll move to single labor, multiple labor, single labor with idle time, single labor without. So there are multiple categories of question. Every question will have a chart to be done. The chart will explain you the formula. So I've done with material variances part. We'll now do problems on material variances. Any doubts on the charts? Any doubts on the charts? Anybody has any doubts you want me to explain again, let me know, because beyond this I'll not explain again. Yeah, tell me. Which one? Okay, yield mix. Yield we started with, again an example, SQ, RSQ, AQ. AQ the question has given 1000, 1500. Now the company says that our standard yield is 80% of the input we use. Input output ratio is 100 is to 80. Let's assume company has produced 1600 units. SQ is equal to AO into input by output. Input by output. Company has produced 1600 units. Company has produced 1600 by using what? By using 2500 unit of raw material. But the standard norm is 100 by 80. 100 by 80. So they should have used 2000 units. 1600 by 2000 is called standard yield. 1600 by 2000 is called standard yield, which is 80%. 1600 by 2500 is how much? 1600 by 2500 into 100. Standard yield is 80%. Actual yield is 64%. I'm going to have a loss. That is, using one raw material, I should have got 0.8 output, but I've got only 0.64 output. I've got only 0.64 output. This is a known norm. For example, at home, if you're cooking something, when you put some input, you expect that this will be the output. If the output varies, it means somewhere wastage has happened. So standard yield is 80%. Actual yield is only 64%. This 2000, my plan was to use in the mix of 1:1. This was my plan. My plan was 1:1. So I should have used 1000, 1000. My plan was to use 1000 and 1000. Put together it is 2000. You have used 1000 and 1500. Now I don't have a problem that you have used 2500. If you have used 2500, ideally that should be 1250, 1250. If you have used 2500, ideally you should follow 1:1 mix. You have to follow 1:1 mix. Total of AQ is 2500. Mix has to be 1:1, which is 1250, 1250. The difference between mix is called as the mix variance. The difference between yield is called the yield variance. 2000 and 2500. You should compare 2000 with 2500. That is called yield variance. You should compare 1250, 1250 with 1000, 1500. That is called mix variance. Any doubts on this? Clear? Can we proceed? Let's see problems now. Come to question 2. Question 1 we'll do it later. Come to question 2. Go through this. Okay, the standard cost of a chemical mixture is as under: 40% material A at 20 per kg, 60% material B at 30 per kg. So two materials are there. So any problem we don't material variance, we'll have to check whether it's a single material or multiple material. So this is a two material problem. The standard mix is 40 is to 60. That's the standard mix I want to follow. A standard loss of 10% is expected in production. This means the input output ratio is 100 is to 90. 100 units of input will give 90 units of output. 100 is to 90 is the input output ratio, because there's a loss of 10% expected in production. 90 kg of chemical A was used, quantity produced, calculate all material variances. Let's start. Initial questions. I will be doing the chart and then the problem. In exam, chart is not needed. So it's a two material chart. Let's put the chart so that you get clarity on the chart. SPAP, two material chart. SQ, AQ, in between RSQ, in between RSQ, starting from SP with SQ, SP with RSQ, SP with AQ, AP with AQ. So our table will be, we are going to solve using a table approach. Four columns: SP into SQ, SP into RSQ, SP into AQ, AP into AQ. SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. The top part is called price, bottom part is called usage, price is the top part, usage is the bottom part. SQ and RSQ comparison is mix, sorry, yield, and RSQ and AQ comparison is mix. This chart is just for to get clarity on the initial questions. Later on we'll avoid it. Now we'll start preparing the computation table. Once the computation table is done, we'll calculate the variances and close it. How many material we have? So in the side, write A, B and total. A, B and total. What is the standard price? What is standard prices? At what price did you want to buy A and B? 20 and fill it at three places. 20, 30. First we'll fill the price part. 20 and 30. What is the actual price? How much did we actually pay? 18 and 30? 18 and 34. First we'll fill the price. Now comes in the reverse order, I'll fill the quantity. That is from reverse order. I'll fill AQ first, RSQ and then SQ. What is the actual quantity used of material A and material B? 90 and two places. 90 and 110. Clear? Come down. Note 1. Computation of RSQ. Computation of RSQ. Again, I can write it directly also this, but being the first few problems, I'll show the calculation. Total of AQ equal to, you've written AQ in column 3 and 4. Total of AQ equal to, what is the AQ of material A? 90. B, there is 189 given in the question, that is actual output. That and this has no link, okay? 90 plus 110 is 200. Split this into Some mix would have been given in the question. RSQ of A, RSQ of B. What mix you said? 40%, 60%. 40 and 60. So tell me the 40% and 60%. 80 and 120. Clear? RSQ of A and RSQ of B. Done. So write into 80 into 120. Clear? Note 2. Computation of SQ. SQ equal to AO into input by output. SQ equal to AO into input by output. What is the actual output produced by the company? Be very clear. First problem you are telling it easily, but many students make error only on this. Be very clear. Quantity produced is AO. Quantity used is AQ. Quantity used is AQ. 189 into 100 by 90. What is 100 by 90? Is there is a loss of 10%. You can even write 10 by 9 also, or 1 by 0.9 also. If your input is 1, output is 0.9, 10% less. Input is 100, output is 90. What is the SQ number? Split this into 2. SQ of A, SQ of B. SQ of A and SQ of B. What's the composition we have? 40% and 60%. So what is 40%? 84. Clear? Now in the calculator, 20 into 84 equal to M plus 30 into 126 equal to M plus MRC. I want to multiply and total them. 20 into 84 equal to M plus 30 into 126 equal to M plus MRC. What is the total? 54. Then 20 into 80 equal to M plus 30 into 120 equal to M plus MRC. 5000. 20 into 90 equal to M plus 30 into 110 equal to M plus 5000. 18 into 90 equal to M plus 34 into 110 equal to M plus 53. Once this is done, problem is almost over. When I say problem is almost over, beyond this what we are going to do is we are going to calculate variances. How are we going to calculate? The marks will be awarded only for the variances. Till this is the computation table. Initial question I'll also do variance calculation, but later on I'll tell variances like homework or you do it on your own. I'm not going to discuss the variance. Variance is just formula application. Where is the formula going to come from? Those initial charts we saw. Now wait for some time. Tell me the formula for material price variance. SP into AQ minus AP into AQ. 260 adverse. We'll write it in some time. 5100 minus 5360. Tell me the formula for material usage variance from the chart. SP into SQ minus SP into AQ. 360 favorable. 5460 minus 5100. 5460 minus 5100. Material usage variance. Tell me the formula, guys. Participate. SP into SQ minus sorry, what did I ask? Material? Okay, sorry, material yield variance. Material yield variance. SP into SQ minus SP into RSQ, which is 5460 minus 5200. Material mix variance. Material cost variance. I want everyone to participate, guys. When I say everyone to participate, you will have to talk. Material mix variance. SP into RSQ minus. I want everyone to talk in my tone. The speed at which I am talking, or the the sound at which I am talking, I want you to talk in that. I don't want you to be just telling it to yourself. Tell me the formula for price variance. Everyone, SP into AQ minus AP into AQ. Metal mix variance. Metal usage variance. SP into AQ. It's AQ. Metal yield variance. SP into SQ minus SP into metal cost variance. Metal mix variance. Clear? So beyond the computation table, technically I don't have anything to explain. Unfortunately, students do this correctly but make a mistake in variance, which is not at all acceptable. I want zero mistake in the variance calculation. In this, if you make a mistake, at least it's understandable, but beyond this I don't want any mistake. Now let's write material cost variance. First problem I'm doing it. Material cost variance is equal to SP into SQ. You can write the short form in exam, minus AP into AQ. The SP, that short form, variance, don't write the short form, write material cost variance. The short form is MCV, but write it as the full name. Material cost variance is equal to SP into SQ minus AP into AQ. How much was SP into SQ in the table? 54. AP into AQ equal to 100 favorable. Now this variance can be split separately for material A, separately for material B. You can apply, we put a total, no, instead of putting a total, A separately, B separately can also be done. Few questions will ask that. Material price variance. What's the formula? How much is SP into AQ? Minus 5360. 260 adverse. 260 adverse. Material usage variance. What's the formula? How much is SP into SQ? SP into AQ. Wait for a minute. At this stage, total of these two should match the earlier variance. Cost is nothing but price plus usage. Cost is nothing but price plus usage. 360 favorable minus 260 is 100 favorable. 360 favorable and 260 adverse. Usage is further broken down into yield and mix. So total of yield and mix should be usage. Total of yield and mix should be usage. Next, material yield variance. Material yield variance. SP into SQ how much is SP into SQ? 260 favorable. Material mix variance. SP into 5200 minus which is 260 favorable plus 100 favorable is 360 favorable. Clear? Any doubts on this? In exam, if you want, you can even present it like this, but that depends on whether you can manage the space properly. Cost is split into price and usage. Usage is split into yield and mix. Cost is split into price and usage. Usage is split into yield and mix. This is provided you have proper space. You don't have space, then write it this way, whatever way you want to do it. Presentation can be done even this way. This is the overall variance. Any doubts on this? Clear? Go through three. Okay, it is going to be similar to the previous question. The only add-on is there is a stock, and the last line says assume FIFO for the issue of material. So how does this make a difference when you have stock is what you're going to see in this question. Otherwise, it is pretty much the similar question. We have two material here, material A and material B. So it is a material variances, multiple material problem. Let's first put the chart. Chart is just to get more and more clarity and get used to the chart. This side will have SP, AP. You can put the chart on your own. No need to look at the screen. SPAP in the other side, SQ, RSQ and AQ. Which are the material we have? A, B, total, A, B and total, A, B and total. What's the standard price? 4, 3. Ignore the actual price, don't write it. There is some adjustment needed. I'll explain that later. AP into AQ, I need certain adjustment. I'll explain that later. I'll calculate AQ, but I'm not going to write that in the last column. Some adjustments are needed. Last column, we'll see it in some time. Any doubts on standard price? AQ is quantity consumed, which is opening stock plus purchase minus closing stock. So come down, note 1, computation of AQ. Computation of AQ. AQ equal to opening stock purchase minus closing stock AQ of A how much is the opening stock given? 35. Purchase closing stock 830. AQ of B 40 plus 1200 minus 50, which is you can copy this in the third column, not in the fourth column. Fourth column needs certain adjustments. 830 and 1190 in the third column. Any doubts on this? Note to computation of RSQ. Computation of RSQ. For RSQ computation, we start with what? Total of AQ 830 plus 1190 2020 split into RSQ of A, RSQ of B. What is the composition? 40% and 60%. 40% is 808, 60%. Any doubts on this? 808 and 1212. Note 3. Computation of SQ. Computation of SQ. SQ equal to AO into input by output. Input by output. How much is the actual output? 1000 into input output. We get split into SQ of A, SQ of B. What is the composition? 40, 800, 1200. The only thing which is pending is the AP into AQ part, where I have to explain you something. 800 and 1200. Otherwise, there's no difference between the previous and this question. The only add-on is that AP into AQ discussion. Any doubts? Into 800 into 1200. Tell me the total. 4 into 800 equal to M plus 3 into 1200 equal to M plus MRC. $6,000. 4 into 808 equal to M plus 3 into 1212 equal to M plus MRC. Second one. Third one. $6,890. That AP into AQ part alone is pending. Now last problem, we did not have any closing stock or opening stock. Now what happens is, what is the AQ of material A? AQ of material A? 830. In this 830, under FIFO method, in this 830, what happens is, whatever was opening stock, I'll consume first. And then what I purchase in the current year. What you purchased in the current month is at the rate of 4 rupees 25 paise. 800, 3000, 400. So whatever you purchased it at the rate of 4.25. Whatever was there in the opening stock, they have not given the price for that. Assumption is if price is not given, this would have been purchased at the standard price. This would have been purchased at the standard price if problem is silent. If problem is silent, they have said FIFO method, you can do FIFO method. If they say LIFO method, you'll have to do LIFO method. If they say weighted average, you'll have to do weighted average. Now listen for some time. Note 4, I don't want you to write, listen for some time. Computation of AP into AQ. Material A, 830 units are consumed. Split into from opening stock, from current year purchase. FIFO method says whatever was there last year, you first consume it. How many units of opening stock is there? These units have a price of 4 rupees. Listen for some time. These units have a price of 4 rupees. What is 4 rupees? Is the standard price, assuming you bought at that price in the last month. They have not given a price. If they give a price, please write that last year. Then current year purchase, you consume 795 units. What is 795? Is 830 minus 35 into 4.25. What is 4.25? Is 3400. If the same question we were following weighted average, then what we will do in weighted average is 3400 plus 40 into, sorry, opening stock. How much was opening stock? Okay, plus 35 into 4 divided by 800 plus 35. That is a weighted average cost, calculates cost per unit. Current year production or purchase value plus value of opening stock divided by opening stock unit. This would have been multiplied with 830. This is weighted average cost. I don't want to spend more time on FIFO versus weighted average or LIFO here. Basic logic is simple. 830 units have been consumed. In that, some units are at 4 rupees, some units are at 4.25. That is why I don't want you to write AP there. We will do this. So 35 into 4 is 140. How much is this? 795 into 4.25. 3378 total. 35. Now what I am going to write is only this: 3518.75. Can you divide this by 830? What do you get? That 4.23 is technically a weighted average of 4 and 4.25. It's technically like a weighted average of 4 and 4.25. So in this question, what we are doing is we are starting with this 830 units. I'm splitting into two. Something has come from opening stock, something has come from current year purchase. Opening stock at opening stock value, which is not given, So I assume 4 rupees. I assume 4 rupees. Current year purchase, you know the value, 4.25. This is for material A. Complete it, then do material B. Complete material A and then do material B. complete material A, which is 3518.75. Do a similar calculation for material B from opening stock from current year purchase. What is the consumption of material B? From opening stock from current year purchases. How many units from opening stock? 40 at what rate? 3. Current year purchase at what rate? Which is I think 2 rupees 2.5. So this is 120. This is 28. Put together. Any doubts on this? Any doubts on the put together number 2995? Problem is almost over. You will have to calculate the variances. Any doubts on 2995? So I go to this table. 2995 put together is how much? Start calculating the variances. I'm not going to take you through the variance calculation. Start doing it. You can check the screen for final answer. Then 10 o'clock only, no? Your cost variance is 286.25 favorable. Usage is 90 adverse. Price is 376.25 favorable. Yield 68 adverse. Mix 22 adverse. I'll wait. You note down the formula and then write it. Formula is already explained to you. So write the formula and then write the answer. Any doubts on this? The variance calculation part is not my focus area. Computation table once done. The formula for every variance is already explained to you. So once that is done, this calculation should be more like a formality. The final answer. Let me know if there are doubts, else I end the session now. Any doubts on this? Variance calculation should ideally be easy for you to do. I don't expect you to make mistakes there. No mistakes in the variance calculation. You want to do in a chart form, you do it in another form, that's your wish. I'll end with this then.